Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Owens Corning quarterly report. Owens Corning offers a diverse range of businesses and services across 4 segments: roofing, insulation, doors, and composites. The company's products include residential and commercial roofing, shingles and components, insulation products, bats, Lucifil spray foam, and foam sheathing, glass fiber pipe insulation, and energy-efficient duct media, cellular glass and foam insulation, aluminum framed glass doors and window solutions, door components, frames, sills, weather stripping, hinges, and locks, glass reinforcements in the form of fiber and mats. These products are distributed to various customers including distributors, home centers, installers, retailers, home builders, contractors, dealers, parts molders, and fabricators. Owens Corning's stock price has significantly dropped by nearly 40% over the past year due to several key news events. The most recent decline of 9.2% occurred on November 5, 2025, after the company reported third quarter 2025 financial results that missed analyst expectations for both revenue and earnings. This was compounded by a weak forecast for the fourth quarter, with revenue guidance significantly below analysts' forecasts. Additionally, concerns about the U.S. economy and job market data in September 2025 led to a 4.1% drop in stock price. Furthermore, Owens Corning's fourth quarter 2024 results showed a decline in demand for its legacy products, prompting a warning about business headwinds that resulted in a 4% fall in shares. These events collectively contributed to the significant decline in Owens Corning's stock price over the past year, with the company struggling to meet analyst expectations and facing challenges in various markets. The primary drivers of revenue growth or decline for the company are largely influenced by strategic acquisitions, changes in market conditions, and shifts in sales volumes. On the growth side, the acquisition of Masonite International Corporation has provided a new platform for expansion, while increased sales volumes in the roofing segment, due to higher selling prices, have also contributed to revenue growth. However, on the decline side, the removal of architectural segment sales, divestiture of building materials business in China and Korea, and lower volumes in insulation and doors segments have all led to a decrease in revenue. Additionally, macroeconomic uncertainty, including tariffs and softness in North America, discretionary residential repair, and remodeling activity, has also had a negative impact on revenue growth. Net income and profit margins decline. A year of challenges, the company's net income and profit margins experienced significant declines from YTD 2024 to YTD 2025. Net income decreased by $1.13 billion, a staggering 1,246% drop. The decline was also evident in the quarterly results, with a 153% decrease in Q3 2024 compared to Q3 2025. Profit margins suffered due to various factors: a goodwill impairment charge of $780 million and losses on discontinued operations and sale of business contributed significantly to the decline. Additionally, gross margin decreased in both Q3 2025 and YTD 2025 compared to previous periods. The net income margin plummeted from 12.6% in 2024 to -10.3% in 2025. The company's strategic review and sale of GR had a major impact on its operations and financial results, while the divestiture of its building materials business in China and Korea also played a role in the decline. These challenges led to a substantial decrease in net income and profit margins, highlighting the need for the company to adapt and recover in the future. The company's financial performance demonstrates a strong ability to generate positive operating cash flow, with more inflows than outflows, as indicated on page 29. The company is successfully managing its cash inflows and outflows. Furthermore, the net cash flow provided by operating activities of $1,196 million in 2025, confirmed on page 6, solidifies this conclusion. This positive trend suggests that the company's operations are generating sufficient cash to support its growth and financial stability. The company's debt level has decreased by 8% from $5,067 million in 2024 to $4,678 million in 2025. However, interest expenses have shown a significant increase. For the 9 months ended September 30, 2024, interest expense increased by $44 million. Furthermore, for the same period in 2025, interest expense rose from $148 million to $192 million, indicating a substantial increase of $44 million. This trend suggests that despite a reduction in debt, the company's interest expenses have grown significantly. The company's financial performance varied across different segments and regions. Notably, the roofing segment experienced growth, with a plus 0.5% increase in 3 months and plus 2.3% in 9 months. Additionally, gains from the sale of precious metals contributed positively to the company's revenue. On the other hand, insulation and doors segments underperformed, with significant declines in sales. Insulation saw a minus 13.7% drop in 3 months and minus 7.3% in 9 months, while doors experienced a minus 37.1% decline in 3 months and minus 32.7% in 9 months. Geographically, North America was the top-performing region, generating $6,378 million in total sales. In contrast, Europe lagged behind with only $771 million in total sales. The Asia-Pacific and rest of world regions had very low totals of $108 million and $20 million respectively. Management's outlook: a focus on efficiency and liquidity management is optimistic about the company's outlook, despite some potential risks. They expect to incur costs related to litigation, regulatory proceedings, and product recalls, but believe adequate provisions have been made. The company has sufficient liquidity, with $286 million in cash and cash equivalents, which will be used to meet debt service and other obligations. The primary strategy is focused on improving manufacturing processes and reducing costs through comprehensive safety programs. Management also expects ample liquidity to meet cash requirements and is working to reduce working capital and improve cash flow through supplier terms extensions. Overall, the company's management is committed to maintaining a strong financial position while driving efficiency and growth. The company has made several strategic moves through acquisitions and divestitures. Key acquisitions include the Masonite acquisition, which boosted revenues and margins for the doors segment. The doors reporting unit was also a recent addition to the company. On the other hand, the company has divested several businesses, including the glass reinforcements business for $436 million and the building materials business in China and Korea. These moves have resulted in an unfavorable impact on net sales. Additionally, the receivables securitization facility was terminated, and the GR business was classified as a discontinued operation, with $98 million of goodwill allocated to it. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid dividends in 2025 and 2024, demonstrating its commitment to rewarding investors with a portion of its profits. Additionally, the company has also engaged in share buybacks, purchasing treasury stock in both 2025 and 2024. This dual approach to shareholder value creation suggests that the company is dedicated to maximizing returns for its investors. Concerns over supply chain disruption linger. A review of the financial summary reveals ongoing worries about supply chain disruptions. Specifically, pages 57 and 61 highlight these concerns, indicating a potential vulnerability in the company's operations. In contrast, there is no evidence to suggest that inventory buildup poses a significant issue at this time. That concludes the financial summary for Owens Corning. Feel free to comment below, and I will be happy to answer them when possible.